All right. Welcome back to another Tech Talk from MarketEdge.com, your source for unbiased technical stock research on over 5,500 stocks and ETFs. With me today is David Blake, CMT, here to discuss last week's market activity and what we should look for as we head into this week's market. David, how are you today?
I'm doing well, thank you.
Great. Let's jump right in.
All right, we had another choppy week in the market last week. We finally did gain some upside momentum as the week went on and ended up with several of the major averages at new highs on Friday, had to close out the week. So good week overall. A lot of strong earnings came out. We had new highs in the S&P 500, also the Nasdaq. I think the Russell 2000 made a new high. The Philly Semiconductor Index made a new high, the Nasdaq 100. And again, we keep mentioning semiconductors, and they just keep on rolling. Tomorrow we have earnings from Advanced Micro, which could give the semiconductors another boost tomorrow afternoon. Can't imagine AMD missing their earnings projections. Anyway, we started out last week, AI hit a little bit of a speed bump. That was because OpenAI said they missed some of their sales goals and subscriber goals that they had set themselves. And that kind of saw NVIDIA, Advanced Micro, Oracle, some of the other AI-related big stocks pull back a little bit. But investors jumped in. They bought the dip as usual. It did stop the Philadelphia Semiconductor Index's 18-day win streak. It kind of went sideways for 2 days, and now it's back to making new highs again to end the week. And also today, it's one of the few things that are up here on Monday as we talk. We also struggled a little bit this week, started with higher oil prices. We saw oil hit a 4-year high midweek of about $110. That's for New York crude. Brent keeps going up. I think it pulled back to about 102 as the week ended. We also had a Federal Reserve meeting last week. They left rates unchanged, which that was basically expected. But one of the things that was important was the fact that the decision was 8-4, and that's the most dissent by the committee since 1992. That sent yields higher. 10-year Treasury climbed to 4.43 before closing at about 4.38. And yields have ticked up a little bit higher again this morning. I noticed that we're right around 4.4 on the 10-year Treasury. So watch that. The 4.3 was the top of the range that it had been in, and now it seems like it's spending time above that range. So we're probably going to see 4.5% here, which could cause equities to maybe flatten out a little bit here. Okay, after that, we saw some great earnings. We had 4 or 5 of the Mag 7 stocks reported. They were mixed. We did get a great report from Alphabet. That was one of the big leaders last week that kept the Nasdaq moving higher. We also had Caterpillar have blowout earnings. Qualcomm was another one that had big earnings. In fact, Caterpillar was up 9.88%. That helped the Dow Jones on, I think it was Wednesday. It was up 790 points, basically because of Caterpillar's earnings. So that was nice. We ended on a high note with Apple coming out with earnings. They hit a new high. They gave some nice, strong forward guidance and got May off basically to a pretty positive start after a great April for the major averages. Okay, now according to FactSet Research, 84% of the S&P 5 companies reporting so far have beaten estimates with a growth rate of about 15%, which is just a little bit above what they were actually looking for about a month ago. A month ago, they were looking for about 10%. And that actually has been even climbing higher. I think this morning they raised the growth rate again for that. The technical condition of the market remains strong. We are a little bit overbought on some of the indexes. Again, I told you that the S&P 500, the Nasdaq 100, and Russell 2000, Philly Semiconductor all hit new highs last week. They're all trading above key moving average levels. That confirms the bullish uptrend. The technical oscillators are all in bullish ground. MACD's positive momentum is strong and rising. The VIX has nudged lower ever since mid-April. That indicates that the traders believe that probably the worst is behind us. And that has actually come down. I think we're up around 30 back in March. And we finished on Thursday. It was at 1689. That was the lowest print since the end of January for the VIX. So the traders are feeling much better about the market and kind of feel that maybe we can just move forward here with the strong earnings, but we'll see how that plays out. As far as the different sectors go, one of the things that does bother me a little bit is the fact that only the technology and real estate ETF sectors have been able to break out to new highs. If this is really a broad-based rally with everything going higher, you'd like to see maybe 4 or 5 of the different sectors making new highs rather than just 2. But I will say all of the other sectors, though, are once again above key resistance levels, which is strong, except for healthcare, which a lot of people are jumping on the healthcare wagon when you hear analysts talk. But healthcare actually had a double bottom point and figure breakout, which is a bearish signal going forward. You want to watch how that's going. And with healthcare, the XLV is trading below its 200-day moving average. I would probably wait until I would see the XLV start to trade above of its 200-day moving average and hold that average for a couple of days before I would start jumping in and buying all the drug stocks and biotech stocks at this point. You want to have a little bit of upside momentum before you jump in there. All of the sectors right now have bullish point figure charts going, except for healthcare. You want to see that they're all in a bullish uptrend on the point figure. And you actually go to the MarketEdge second opinion on this. If you come in here and go to the second opinion, here's utilities. Go here, click on the point and figure chart, and there you can see there are utilities just had a double top breakout. Let's take a look at XLF. Okay, you can see here we're still in an uptrend here on the point and figures again. And if we get up to around 36 and change, that will be a double breakout on that. When you see these things, like here's a double breakout. Once you see the breakouts happen, usually you get a nice little jump on these things to the upside. So that's something you can go into the different modules and take a look at that and go back to the regular second opinion off the menu over here and see what some of those are going. Okay, anyway, the underlying breadth last week was surprisingly for a decent market. It wasn't a great gains last week. We were up 0.5% and 1%, things like that. But the underlying market breadth was a little bit mixed. I think on the NYSE, you only had about 250 units gained on the AD line, and the Nasdaq, I think, was actually negative on AD line. That's something you want to watch. Normally, we talk about AD line being a leading indicator, and you will see that normally top out about maybe 3 or 4 weeks before the market begins to turn over. And we're in our third week since the NYSE AD line made a new high. So kind of keep an eye on that. We're not too far off the high, but you want to see it push through some new highs here if we're going to continue this rally much, much further. Investor sentiment also is getting a little bit too bullish again. We saw a divergence between the retail and institutional investors, though. Retail bulls fell from 46% all the way down to 38.1. That's historically above the 37.5% bulls on average, but that's a big drop, 8 percentage points. I'm not sure what they saw. The pros, their exposure index is still up here around 94%. They didn't actually report last week for some reason. So we left it at 94%, which is basically all in. They were down to 69.4% just 2 or 3 weeks ago, and they've been buying equities up here as we're having this big move here in April. This week coming up, we're going to have a strong earnings week. We have tonight after the close, we have Palantir Technologies. That's one of the darlings of Wall Street. We did have one analyst downgrade Palantir today. Also, this week we get Advanced Micro Devices, and then Arista Networks looks strong. We have Uber coming out this week, Shopify. On Wednesday, we get Walt Disney. We'll see how that comes out. Then Thursday, McDonald's, Wendy's. And then on Friday is the big economic data release to watch for. That'll be Friday's non-farm payrolls from the Bureau of Labor Statistics. We want to see how that's going. It was surprising that last week we had one of the lowest initial jobless claims report in almost 50 years. That's something to know. So the job market remains resilient. So that's good. I think they said in April, they're looking for 50,000 new jobs to be added. That's down from 178,000 new jobs in March. So we'll see how that goes. The economists right now are looking for an unemployment rate to stay steady at 4.3%. So this week it's pretty much just going to be earnings to watch for. If oil breaks up above $120, that would probably put some downward pressure. One last thing I want to mention is that I think at the end of this week or maybe next week, the CTI is going to roll over into a negative configuration. That doesn't mean that we will go to a sell on the market, but it will probably bring us to at least probably down to a neutral market posture. We confirmed that with our momentum index and Index, and also the FLDs, the forward lines of demarcation. We follow for confirmation that the market may be getting a new downtrend or whether it's going to hit support and go back up. So keep an eye on that. I will make comments in the weekly market letter about what we see. Normally when that starts to turn over, and the reason it's going negative is because the influence of longer cycles. So we have the 36-week cycles coming to an end. We're going to have the 72-week or 18-month cycle is moving down also, and they overpower the shorter cycles according to Hirsch. So that's something that we'll talk about more over the next week or two. Finally, if you have questions, send them in to the support group, and that way they can go over again some of the modules that you see on the screen that maybe you're not using or you don't understand what they're giving you. Other than that, that's about all I have for today.
Very good. Thank you so much, David. If you have questions for David or anyone else on the MarketEdge team, feel free to send them in via email to support@marketedge.com or drop them below if you're watching on YouTube. That's it for this week. If you'd like to try technical analysis from MarketEdge, your first 2 weeks are free. Just head over to our website to give us a try. If you're watching on YouTube, we sure would appreciate if you would like and subscribe. And we hope you have a great week. Thanks so much for watching. All right, that's it for us.
Okie dokie.